All right. Like I said, so today we're gonna be talking, about some things that are going to help you with your entries into the market and what that is going to look like, right, is order blocks, right? We're gonna talk about order blocks today, all right? So along with fair value gaps, right? Also known as FVG, or also known as imbalance. Okay. Once you understand these things, right, it makes it a lot easier or a lot simpler, rather, for you to enter the markets effectively, right? So I'm gonna go over them. I'm gonna go over how I look at and utilize them, all right, as much as possible. All right. Of course, I can't give you everything, in this hour. Well, yeah, 45 minutes or so. But as much as possible, I am going to give you the necessary information that you can actually go ahead and utilize it, and start to really implement with all the rest of the information that I would have given to you. So let me say this, like I always say, nothing is separate and distinct. This is not okay, I'm talking to you about order blocks and immediately your mind forgets market structure. Absolutely not. Or I share with you fair value gaps are imbalance, and immediately your mind forgets order blocks, or your mind forgets, break of structure, or your mind forgets market structure. Absolutely not. Everything works in tandem. Everything works together. All right. You, the order block makes sense with the market structure. All right. The imbalance makes sense with market structure. All right. Everything works together. Am I making sense? All right. Let me know that I'm making sense. And let me know that you understand. Okay, because I've seen it so much. Persons get exposed and then like, oops, all right, forget everything else that I learned. All they need to know is this. Nope, 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 nope. Let me know in the chat. All right. I'm talking to you guys, you talk back to me. All right, we got 30 people in the call. Everybody, you guys understand what I'm saying before I start? I'm not gonna jump into anything. I don't want, right? That is the case of, all right, I learned this, so I forget everything else. Right? Everything works together. Okay. This is not, like I said, it's not a strategy here that I'm bringing to you now that's like, oh my goodness, this is the holy grail. Absolutely not. This is just principles, principles that work. So the market moves. This is what happens in the market, and then I'm gonna show you what happens, and then I'm gonna show you how to utilize it. All right, and then you just go ahead and practice and apply. All right. All right, good. Somebody say awesome. So go ahead, grab a notepad, grab a pen, grab a smartphone, grab a laptop, something so you take notes, pay attention to everything that I share on this call. Now, order blocks. All right. A very simple way to identify order blocks. All right. I'm gonna draw it out for you, right, so that you can see, and then I'm actually gonna show you it on the actual chart. All right. So order blocks. So typically, the members will be looking at entries, right? So typically, we are looking at, let me bring it all the way home first. As you guys know, right, we got these three phases in the market. We got the impulse, we got the correction, and then we could either call this another impulse or a continuation. Okay, so this is the three phases of the market. The market always moves like this. You got first the impulse, all right? Then you have second the correction or the retracement, or also known as a pullback. And then we have another impulse, or, all right, we can call this a continuation. All right, so impulse, correction, or pullback, and a continuation. Okay. And, so you understand why I interchange the terms, because then this could become your impulse, this becomes your correction, this becomes your continuation, and so on and so forth. Right. Now, the area that we're focusing on is this area right here. All right, focusing on this area. Why? Because this is the area that will help you determine. when you are going to enter the market. All right. So this is the pullback right here. Okay. This is the area we're focusing on. It's the pullback. And we'll also be focusing on this area in the market. Okay. So we're looking at this part of the market and we're looking at this aspect of the market. I hope it makes sense. I'm trying to keep it simple, right? But you guys advance, so you guys should be all right. All right, with certain terms and so forth that I utilize. Okay. But this is literally what you're looking at. One, we want to see how far or how low are we looking to buy in the market. And what area are we looking to actually buy in? Okay, so first the focus is going to be here, and then second, oops, all right. First the focus, oh boy. All right, all right. First the focus is all right, focus is going to be over here because you want to look and see, okay, where are we actually going to buy? And then here, this is what helps us, of course, pick up the actual entry market. All right. So now we're looking at order blocks. All right. So order block, how to identify the order block. One, a simple way that you can identify an order block. I'm gonna give you the simple way, then I'm gonna give you the more technical stuff. All right. Simple way that you can identify the order block is identify identify engulfing candles in the market. Okay? Identify engulfing candles in the market. All right. I trust everybody know what's engulfing candle. I'm gonna show it regardless. All right. So identify engulfing candles. All right. We identify that engulfing candles is pretty simple or much easier to identify the actual order block, right? So what is an engulfing candle? What does that look like, right? You're looking for candles that are similar to this right here, right? Similar, okay? So for example, this was a sell candle. Okay. This was a sell candle, for example, that got taken out by a bullish candle. All right. You see price still like this, boom, and completely took out this previous candle right here. Okay. Now, this candle would be considered, right? This would be considered to be your order block, right? This is where the momentum basically came into the market. Similar to how you would identify your supply or demand zones. All right, is everybody following? You see, remember I said everything is intertwined, everything is interconnected, right? Similar to how you would identify your supply or demand zones. It's like where's the momentum at in the market? All right, where's the momentum at in the market? Yeah, you're looking for those areas. Where's the momentum at? Where the price, give us that engulfing candle, right? Where is it that the market had a huge injection of volume, right? Like where are the orders at? Okay, where are all the buy orders and so forth at, right? Back in this area, right? Everybody following? Let me know. Just put AC in the chat, but follow, put something, just let me know. All right, just put following in the chat. Perfect. All right. And that's one, right? That's one. All right. The next thing that you want to look for, okay, the next thing you want to look for is you want to look for where's the imbalance, all right? So the imbalance created, right, or the fair value gap, all right? So if imbalance or fair value gap is created, from that area, then you will know, okay, cool, we have a valid order block, all right? So right? Because you can have like this next candle, for example, comes, boom, right? So let's take it like this, right? We have like a low wick, right? Add a little bit. Okay. Let me take this up a little bit. All right. So we had a wick. We had a wick here in the market as well. Right. So we want to know, okay, because we know, right, imbalance or fair value gaps is created from like a three candle sequence, right? So we got one, two, three candles, and in this space right here, right, in this between here and this space right here, this width right here, right? We had a basically a inefficiency. Let me change the color. We had an inefficiency in price, right? Where the market basically did not trade balance. As we know, the market is made up of buyers and sellers. Okay. The market is made up of buyers and sellers. So we need to be buying, we need to have buyers and sellers basically present in the market. When we had this big um buy, right, that went on here, and basically no sales took place, in between this space here. We left an inefficiency in price. Like the market did not trade balance. That's what we call it, imbalance, right? And as a result, it creates a gap in the market. Okay. So once we have one, that engulfing candle, boom, two, we have that imbalance that is created, right? Then we can consider, right? We can consider this candle right here, right? We can consider this candle right here. You could use the candle, you could use the candle to the wick. Doesn't matter, right? Use the entire thing from the wick to the actual candle. You can consider that candle, you can consider that candle to be your order block, right? You can consider that candle to be your order block. That is two things, right? I'll give you one more. Okay. So you got the engulfing candle, we got the imbalance that is created. Okay. Put here, balance. All right. We got the imbalance that's created. Great. We have the engulfing candle, phenomenal. Okay. And lastly, all right, lastly, you want to see uh liquidity grab. All right. Now, I don't want to go too in detail with it because we didn't really go over much on like liquidity and so forth, but I'm gonna touch briefly on it. All right. You want to see a liquidity grab. Now, what does that simply mean? You want to see the market trade lower than what would have been considered to be this last sell. So, for example, like what you would want to see is that you see this engulfing candle, give you different examples. You will want to see like a wick, like below this previous candle. That would have shown you that one price traded below, right? Price traded below the sell, grab the liquidity, grab the money. Remember, liquidity is just the money, it's orders as well. All right, it's orders that would have been collected, people that would have had sell stops in, right? People that would have had stop losses below, etc. Right? It's a liquidity grab, it's a money grab where the market just pushed lower than this particular low here and then pushed up. So you have those three things, right? It basically confirms or strengthens rather the or the block that is here, right? Let me know if everybody's following. Anybody lost? All right, just let me know if you're following. Let me know if you're lost. Like that's what these sessions are for. I'm here to help you. I want to make sure you get clear. All right. I want to make sure you get clear. So one, you want to see engulfing candle. Two, you want to see imbalance or fair value gap. Three, you want to see a liquidity graph. All right. You want to see price trade lower than the previous candle. Yeah. You want to see price trade lower than the previous candle. Right. Let me know. Let me know. Let me know. Okay, good. I see the all clears. All right. Now this could look different, right? I'm gonna show you the different ways that it could look. It's not always gonna look, pretty and perfect like this, all right? It's gonna look different. So just showing you, just trying to make it as real as possible before we get to the actual chart. right? Because they ain't gonna look this perfect every time. Some people be like, "Hey, well, if I see this, is it really, is it still order block, etc." You know? So let me give you another example. Okay? Give you another example. So you may see something looking like this, where price is coming down, right? Comes down, right? Boom, and then comes down like this, right? You get market does like this, you got like a little indecision candle. Oops. All right, you got an indecision candle, buying, all right, boom, all right. Just make sure I make sure my drawings are good. You know what I mean, guys? All right. Then we have we start to get like a buy candle come in. All right. Make this blue. Yeah. All right. Then we got like another buy candle come in. All right. Boom. All right. For argument's sake, we're gonna just make this candle blue. All right. It don't matter. Really, and truth. This could be red. This could be blue. Right. So just remember that this could be red. This could be blue. It don't matter. All right. Um, but this is what is happening. Okay. So this is what you see happening. Okay. Now, first thing first, and let me ask you this question. Number one, do you see any imbalance in the market? Is there imbalance here? Can you state, well, yeah, as price pushed up, it created imbalance. Yes or no? Put it in chat. Yes or no? Put it in chat. Is there any imbalance? Okay, perfect. Yes. All right. So great. So for example, between here and here, all right, market traded inefficient. Okay. So we had imbalance. Boom. All right. We had imbalance here. Okay. Great. Number two or three, did you have a liquidity grab? All right. Did you have a liquidity grab? See, did you have a liquidity grab? All right, great. All right. Liquidity grab, basically we are price traded lower than the previous candle. All right. This last sell candle, we have price dip down below it. Great. Give us that liquidity grab. Boom. All right. And then do we have an engulfing candle? Let me ask you that. Do we have engulfing candles? Yeah, absolutely. So engulfing candle could look like, so let me just put this note here, right? For those of you that may be seeing it for the first time, engulfing candles, we could look like this, which is this first one that we spoke about. Whereas you got one big candle taking out a previous sell candle, or it could look like this, where you got this three candle sequence where, we got three buy candles, one after the next, right? You also can consider that to be engulfing candles. Okay. All right, so you got three candles, boom, 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 one after the next. All right. And basically, always remember this. All the engulfing candle is just momentum in one direction. You got the market moving aggressively in one direction, right? Market engulfed, previous sells, etc. We just got that momentum going in one direction, right? So this is an example of engulfing. This is also an example of engulfing. So when you see this, yes, we got those three things. One, engulfing. Two, imbalance. Three, liquidity grab. All right. So then the candle that the imbalance was created from would be considered to be your order block, right? Would be considered to be your order block. Okay, Henderson, coming to you shortly. So this candle, right? Remember, that's one thing at a time, right? This candle would be your order block. This candle would be your order block, right? So this candle right here, right? The candle that created the imbalance, okay, or at the beginning of the imbalance, let me see, all right, which is this here, all right. Remember, the imbalance is this space that was created, this gap here, right? This gap right here, imbalance or FVG. This would be considered to be your imbalance. Okay, so then this candle would be considered to be your art block. All right, this first candle right here. All right, I'm gonna show you why this is important. Because remember, what we're looking for is we're looking for entries into the market. Okay, we're looking for entries into the market. Your entries will come at two places. One, you'll be able to enter the market from imbalance, and two, you'll be able to enter markets from order blocks. All right, I prefer the order blocks, but either or works. To be quite honest, and it could vary depending on the actual situation. Okay, so what will happen is that this imagine this part here where the market pushes up. This is this, right? This is the market pushing up, right? Everybody follow me still? I'll make sure that my examples are clear. This is the market pushing up right here, all right? So what we're looking for, are cool. What we're looking for now is this, the market now to come back, all right? What we're looking for is the market now to come back, all right? Which is this right here. Okay. So then when the market comes back into this area, that's where we're looking for to pick up entries in the market, either within your imbalance or within your order block. I'm going to give you examples on the actual chart, right? So then you're looking for the market to then continue in a manner like this. Okay. So this impulse, right? The impulse creates the order block, the imbalance, right? All those things you want to see. Number two, you want to see the market then pull back into that imbalance or that order block, right? And then continue in the direction that we want it to go in. Okay? Is that making sense? So in the same light, once again, you got price do like this coming up, boom, it pulls back, boom, then you're looking for entries here at the bottom because remember, you want to buy as low as possible. All the time, you're always looking to buy as low as possible, right? For that to continue. So we're not looking to buy here. We're not looking to buy in here. We want to buy low, right? Low. So that's why we don't chase the market. It's like let the market go, no problem, right? We know for you to continue, we need to see a pullback. When it pulls back, then we're looking to enter the market. Why? Because then it reduces our risk and increases our reward. All right. That makes sense. All right, that makes sense. I'm taking you through no process. It doesn't matter. Oh Lord, I can't remember how to pronounce Kanija. Right? It don't matter that you could use this. What if price dips below our imbalance or order block? No. All right. So we're gonna get there, right? I want pull that question for sure, right? We're gonna get there too, because then obviously, it's this is where things could become invalid. Okay. So I'm gonna show you on the chart where it works, and I'm gonna show you where and this is the thing about it, is that nothing is 100%. I want you guys to always remember that. The market will do what it please. Yeah. But we have certain things that we can look out for, right, to help increase our I don't want to say our chances, but can increase our chances in a trade, right? That's a word I could probably use, right? And increase our chances or the probability, right? It can increase the probability of actually having a successful trade. Okay? Correct. Like T said, probabilities. Yeah. It can increase the probabilities of actually having a successful trade. Nothing is going to be 100%. Nothing. Otherwise, all of us, we would just be winning every single trade, right? It's not going to happen. Okay. So, two questions was asked. I think Henderson had asked a question earlier. Let me check it real quick. What if there is a wick on the subsequent candle? So I'm assuming you mean this candle right here. All right. I'm assuming you mean this candle. Just let me know in the chat. Say yes. Okay, awesome. So, for example, if there is, a wick on this candle, really and truly, doesn't matter. What you're looking for is, did it create an imbalance in the market? All right. That's what you want to know. All right. Price trading like this. That was there. I mean, I see, oh, y'all tell me, right? If you see this in the market, do you still have imbalance in the market? Is the market still not balanced? Yeah, for sure. Right? No, no, perfect, right? So that's what you want. So regardless, if this happens, the market is still imbalanced. No, where it would kind of weaken, right? I don't want to say it becomes invalid, but it weakens the probability is if you see this happen, right? Whereas we got like a wick, right? We got like a wick here now, in the market. Is it still imbalanced? Yeah, let me know. Absolutely not. Right? It's not, it's at this point, it's not imbalanced anymore. So what you will have to look for now, right, is you'll be looking to see, okay, how did the next candle play out? So for example, you'll be looking at this particular candle here now, right? How did this candle move? Right? How did this candle play out? Is it like this? Then you'll be able to say, okay, well, cool. Well, the imbalance was actually created here, right? The imbalance was now created here, all right? And your or the block will basically move from it being this candle to then you looking at this particular candle right here. All right, that makes sense. All right, but I don't want to go into the complexities as yet. Right, I want you to get the basic stuff first, and then we're gonna get into the complex stuff afterwards. All right, because then that's now we get into like when does or the block become weaker, and we don't want to get there yet. All right, I want you to grab it first, and we're gonna get there later on. So everybody get what I'm saying so far though? Can you go over where you choose? All right, hold on, let me see. Can you go over where you choose the art of block? All right, so it's three things here. So the art of block moves where the imbalance is. Yes. All right. Yes. If an area becomes balanced. All right. So like if you had like a nice area like this before, and then it balanced out, all right, then it basically reduces the strength of this particular order block, right? And you can probably move to a higher area where it's created, right? But let me get to that. Let me get to that question. So, yeah, can you go over where to choose the order block? All right. So three things. All right. Always remember these three things that you're looking for in terms of you identifying where the order block is. Number one, you want to see engulfing candles. Engulfing candles looks like this. Either this, or you can see engulfing candles looking like a three candle sequence. All right. On the sell side, of course, we just flip this. All right, where it's a small buy, a big sell. Okay. So on the sell side, it is basically small buys, right? Small buys, big sells. All right. So the momentum is on the sell side. Okay. All right. So then you will see pre-sell candles, on the other end. Okay. So that shows you the momentum in the market. That's number one. Secondly, we want to be able to Secondly, we want to be able to identify, um, we want to be able to identify imbalance. Okay, like was the market trading balance? All right. Remember, as we always say, the market is always looking to do two things: one, rebalance itself, and two, seek and destroy. Seek and destroy speaks to words. Number three, which is liquidity grabs. Okay. So is the market balanced? All right. Is it just buys, right? Where the market just went up, and there was no sells. All right. That's what we're looking for when we say is the market balance. All right. So we're looking for the market to balance itself out. Okay. So therefore, what we want to identify is where is the imbalance in the market. All right. Where did the market just trade in one direction? Where is the imbalance? Where are the gaps? Okay, where are the gaps? And that's where we start to look at this now, where, for example, we just had, right? Let me just move this. We just had buys in the market where price just went up. Boom, boom, right? And when we look at the this candle, this was your last sell, right? This was the last sell, right? That's where price created a wick where it pushed up and then it came back down. That was the last sell down in the market, right? In this space right here, right? We just had buys. That's it. Like all that was happening here was just buys, right? There was no sells being taken place. There was no sells that took place in this area right here. So we want to see, right? We want to see imbalance being created. Perfect. We got that. Number three, all right, to strengthen our confirmation, we want to see a liquidity graph, right? We want to see price dip below, the previous candle, okay? This previous sell candle. So for example, if this was price coming down, right? First, market coming down, coming down, coming down, and then we dip below and then push up. Great. That is phenomenal confirmation for us. What is that phenomenal confirmation? Is because price needs liquidity to move in a particular direction. Liquidity is what drives the momentum, right? And I hope all this making sense. Liquidity is what drives that momentum. All right. Liquidity is money. Liquidity is the fuel, like Steph said. All right. Liquidity is money in the market. So we got more money, the market pushes stronger in a particular direction. All right. So we want to see, all right, if we get that, then it's like great. That's phenomenal for us because we got the liquidity, right? That's grabbed, the money that was grabbed. So we know that, okay, price is pushing hard in this particular direction. All right. So now all that's for us to do is we got all those things, we see it, we identify now where the momentum basically began, all right, which is within this order block, right, which is basically where orders were collected, where orders were placed, that again drive the momentum, all right. We are looking at the market to trade back into these areas to continue in a particular direction, right? Now, every time it won't happen, right? It's a fact. Every time it won't happen, but more often than not, it will. And when it does, it's a phenomenon. It's beautiful, right? It's beautiful, right? So I'm gonna show you now on a chart. So let me know if that helps, Anna. I hope that helps. I'm gonna show you on the chart so you guys can see like practically what I'm saying, right? And then we could like ask any questions and so forth from there. All right, I'm gonna show you how and then we'll go actually a little bit deeper once we got some more time. All right. So let me know. You guys good? We good?
Good to go from my end.
All right. Cool, cool, cool. All right. So let me show you what's going on. All right. So all right. And you guys will see this like all over my charts because it's basically the way that I view the market. Right. So let us see. I'm gonna literally go from like previous examples. I think we should got something here going on. All right, cool. Guess we use this. All right, perfect. It's just like what we were saying. All right. So here. All right. So for example, we got price coming down, down, down. All right. We got price dip below right here. All right. Then we have price push up, all right, give us a engulfing candle, right? Price give us an engulfing candle. Did we create imbalance? Did we create imbalance?